because they tell us what's happening on a weekend-to-weekend basis, and they're completely reliable. So let's have a look at Sydney's clearance rates historically, and you can see how house prices quite clearly track clearance rates. This is updated for the March quarter. You see the same relationship. I used to have this argument all the time years and years ago when I started actually introducing market analysis based on auction clearance rates. It was always this sort of negative element that people would say, no, it had nothing to do with the housing market. Hello. You can quite clearly see how those very strong clearance rates that we've had in Sydney, in fact record clearance rates, and we're now getting record house price growth. It's quite logical, obviously. So let's have a look at the recent trend in our auction clearance rates. It's telling us that story. We can see last weekend 86.8% clearance rate. Now, at the beginning of the year, I would have been like, oh wow, that is just about a record. But I'm looking at that going, oh yeah, hold on. Because the weekend before we had 90%, which was the highest clearance rate the Sydney market has ever recorded. 90% clearance rate. Quite extraordinary. And we're sort of tracking around about an 88% clearance rate average in that period. So you'll never get 100% because, well, I shouldn't say that, but because vendors are going to be there, no, I don't give a damn what you do. I want more, pass it in, right? And that'll be it because, that's the greed factor. And vendors are in this great position now where they can say, no, you keep fighting, I want more. And they might start thinking, I'm going to wait till spring. I'll get even more. So anyway, clearance rates we can see, and they are, we're now, this is last year's dip, COVID dip, right? And obviously we're going to be significantly higher going through this period. And you can see how the market did recover, and auction clearance rates told us that recovery story. And look how quickly it recovered after the shutdown. Once the volume of product came into the market, people were buying it, right? COVID was just a distraction, in a sense, to our housing markets in the short term. It was a physical constraint to transactions. Now these are clearance rates of houses versus units so far this year. Again, this is validating how similar the buying demand for units and houses is. Obviously not as high as houses, but these are very strong results nonetheless. When we look at units, which are just below the house clearance rates, but very, very strong as well each weekend. So as I said, Sydney are a high density market. So these are the monthly results in terms of our clearance rates, and these are for all properties, houses and units. You can see inner suburban locations, no surprise, are doing the best as they usually do. You can see these clearance rates tracking above 90% or in the high 80s in all the centres, all Sydney's regional centres. And this is the point to the market at the moment. It's not just strong in every capital city, not all at the same level, but we can describe it as strong in each capital city market, ultra strong in Sydney, but it's also strong through all the regions. So capital cities, buyer types, property types, regions are all experiencing strong demand at the moment across the board, with few exceptions. This is the unit clearance rates over the month of February. And you can see unit clearance rates, again, high, particularly in these inner suburban locations where you have higher numbers. Obviously, the ones with the smaller numbers, their clearance rates are more volatile because there's smaller observations. But where you get the higher volumes of units being sold, the clearance rates are very, very strong. And last weekend's results, as I said, 86.8%. But you can see these results in all the capital cities are very strong. Adelaide, 97% clearance rate. We see 90% in Adelaide and Canberra almost every weekend now. And the remarkable thing is Brisbane. We've never seen clearance rates in Brisbane at that level. They're typically, a good result in Brisbane for a Saturday is 55%. We're going like, hey, wow, that's great. Brisbane's doing really well. Now we're getting 80%, 80%, 70% clearance rates in Brisbane. You can see that compared to the year before. But across the board, you can see how much higher all markets are. And even Melbourne's now, and that was a holiday weekend last weekend, but as it's come through its shutdown period, Melbourne has also accelerated. But there's no doubt, who the leader is in terms of the number of properties sold at auction, and that's Sydney. And there's around 700 properties going under the hammer today in Sydney. So it would be a shock if there was anything under about 88%. particularly with all the momentum going forward. And they're the regional results for last weekend. So new listings, I also track new listings. We'll just roughly go through this. No surprise, new listings, and these are newly listed properties nationally, are higher than where they were a year ago at the same time. Of course, that'll climb now with the COVID issues coming in. But there are 16% more listings nationally in the market, new market now, new listings in the market compared to a year ago. We can see there that Melbourne has the highest number last week of new listings. They're tracking around about 20% more new listings than Sydney. Total listings, this is stock on market. We can see Melbourne has the highest number of properties stock on market. Sydney units and houses and units are quite similar in terms of the number of properties that are listed for sale currently. But certainly Melbourne has more overall. Newly reported sales. So these are newly reported sales in Sydney on a weekly basis. We can see that newly reported sales are around about 20% higher compared to the same time last year. So new sales and new listings, it shows the market has lifted, both in terms of vendors, sellers coming into the market, and the number of sales that are occurring. We can see that Sydney's ahead of Melbourne. Last week was a holiday weekend. No surprise, similar, but last week they're down by around about 20% of new sales compared to new sales in Sydney. So summary. All right, glass of water first. All right, so Sydney is in catch-up mode. We all know that. In fact, I'm going to start asking questions in a minute, so be ready to answer them. Only joking. We're in catch-up mode and we're set to record strong prices growth through 2020. I think that the growth rates will start to dissipate from the March quarter onwards. We'll wait and see. Prices surge will ease over the year as affordability declines through higher prices, steady mortgage rates and low incomes growth. Most Sydney regions' price ranges, buyer types and property types will experience strong buyer demand through 2021. The Sydney market is clearly driven by owner-occupiers and first home buyers, with investors, although rising, remaining at record low market share levels. The medium-term outlook is for steadier, more reliable prices growth, with no prospect of higher interest rates in the foreseeable future. A chronically undersupplied Sydney market will continue to embrace higher density living, fuelled increasingly by empty nesters, downsizers, and first home buyers seeking highly serviced, and this is the key, highly serviced, high levels of infrastructure in suburban locations. And that's, as prices rise, means that, you know, we've made the case for apartment demand. We'll start to look at locations which are serviced by that but don't have the high price tags that you have, you know, in the eastern suburbs and the lower north. And that means, you know, areas such as the hills and of course the Shire, the Sydney South, which still represent good value opportunities and within reasonable proximity to the city. So these are my brave forecasts for the year, 10%. So you think about people, 10%, oh, I'm not crazy. Saying that for a while. Well, some people say it, but that's all right. The 10% Sydney, Melbourne. But remember, that will only bring us back to being 10% higher than where we were 3 years ago. And I think 10% prices growth is completely rational given we've had incomes growth and mortgage falls in that period. We could go higher because of that factor, but we are not overreaching this market at the moment. Do you understand that? It's not a crazy runaway housing market. It's just catching up to where it should be, and that's 10%. As I said, these things are always problematic, but I think that that's a rational result. That 5%, which I think we'll get this quarter, but I think affordability barriers will start to enter into the equation. But let's remember, we're already halfway there. Okay, we're only a quarter away through the year, and we're halfway there. So hey, I could be wrong, but if I'm going to be wrong, I'll be wrong on the low side, not on the high side. You understand? We're halfway there. Sydney apartment prices, I always thought I was a bit under the money there, but up by 3% this year. We're already up 2%. So I think I'm going to be a little skinny on that one. So I might revise that, but we're already up 2% in the unit market. So I think that, you know, rationally, given results to date and how much energy we have in the market, and that FOMO thing that's, you know, really quite evident, that we may certainly exceed those forecasts this year. So again, I guess I finish off by saying about misinformation, ignorance. We are always a hostage, and it has been, I guess, about that cycle that means that there's fertile ground for exaggeration or fear factors or over negative or over positive predictions for the market, and that is the curse for our markets, because you need to be informed. And what I try to do is provide more information, reliable, real-time information, to give you the appropriate tool set to make your decisions, right? Watch out for my site eventually, which will get up, but I've got a lot of tools that have been developed, real-time data modelling tools that are give you a better sense of where the market is and where it's going without relying on those typical backward-looking price sets that we look at. That's why I've mentioned the auction markets as an example, but they're really only capital city markets. And like I said, the ignorance, look, it's headline chasing. I don't blame the media for that. They have to draw and capture your attention. That is what they do, right? And if people are prepared to, I guess, risk their reputations, whatever they are, by making outrageous statements, 40% price falls, etc., then so be it. But I guess we have to be more circumspect, more rational about what we listen to, but how we actually take it on board as well. And that means getting a better information resource. It's not all about what somebody's saying. You need to also have that validated by what the data is showing you as well. It's important to have the data as close to the action as possible, not what happened 3 months ago. But of course, the exception is for those that buy on the fear and sell on the greed generates. Maybe not so much greed, but you think about it. The last two presentations I did with you, Don, we were at the bottom of those little curves. If you had bought on the first one, when we were saying, look, I know it looks tough out there, right? I know there are predictions of 40% price falls, etc. this year, but if you had bought then 2 years ago, by the end of this year, your property value is likely to be 25% higher, 25% higher than what it was there, right?
Okay for me. No
So, buy on the fear, right? So, all right, well, there's our beautiful Sydney. So we'll finish on a high note, and it looks like the same sort of day we have today. All right, I can hear that. Sold! Oh, yeah, are we all done? Yes. So booming house prices will ease over 2021, but steady, reliable prices growth will continue. So thank you very much for your attention.
Cool.
Thank you very much. We're going to give him some time to catch a breath and have a drink of water. Thank you for having me seat. Very rarely I can, Anyway, was that fantastic or what? First time real-time information that you are getting that isn't from realestatedomain.com, that isn't twisted by the mass media. So there's a few questions that I got from some of the people online.
Yeah, I'll stand.
I can sit down if you want.
Stand up too.
Okay. Okay. So one of the questions was with an all-time record high on clearance rates, 90% plus, and 19% plus on more new listings coming into the market. Are we transitioning into a seller's market?
Well, it's a seller's market now, clearly. I mean, if you've got 9 out of 10, if you're a seller and you go to the market and you've got a 9 out of 10 chance of selling your property, I mean, those odds are record odds, right? It means obviously there will be prices growth because you've got a number of people who want to secure your property, so they will maximise their position to secure your property. Now, volumes are still holding. In other words, volumes are around about where they were a year ago in terms of auction volumes. Overall listings are higher, but of course we were entering COVID a year ago. But the supply and demand is quite evenly matched, and that shows it's releasing both supplier demand energy and supply energy, which has been held back. But you've got to understand that most buyers are sellers and sellers are buyers. So they're operating in the same market, but at different points of time. Because if you're selling now, right, then you're going to end up going to buy something. So the jeopardy is in a seller's market is perhaps you should think about buying first, because that's the hard part at the moment, because you don't know where your price is going to land, right? But then once you've bought a property, you know, the property you want, then you sit back and you've got the upper hand, you've got the whip, right? Because hopefully, all things being equal, you'll have that strong competition. But the other way around is that if you sell your property now, it may take you some time to buy a property. You may pay more, and in the meantime, your property that you've sold you could have got an extra 10% or something on that, which you've absorbed. So these are the problems in a boom market that the buyer has. So it's definitely a seller's market, but it's a market where a seller should think about buying first, right? And if they can't, maybe forget it for a year, and things will be settled. But if they forget it for a year, they'll be paying 10% more, but they'll get 10% more for their property, right? So if you understand what I mean, it's the glorious uncertainty of buying and selling houses, right?
Yeah, we have a few clients where actually they're in that position, and it's funny that you mentioned this is the ideal time for downsizers and empty nesters to get into the market.
Because you know you'll get a good price for your property, but you also can take advantage of good stock levels, but they're not going to last.
Okay. Oh, that's an interesting point. Slide 33, I don't know if you remember, but there was a point where you mentioned that we noticed that the number of DAs, development approvals coming through for upcoming developments looks to be on a downturn.
Absolutely.
Is that going to match the so-called surge of, I guess, migration and people coming into Sydney in particular?
I think that we've been saved in the short term, as I said, from a definite housing shortage, which I was calling last year, the year before, by closed borders, right? Now that's obviously we're working hard to open those borders again. We have to have them open. We need student numbers back, we need tourists back, right? We need business travellers back. It's got to happen before we get that 4% unemployment rate again that everybody's hoping for. Now the government's obviously working hard. You've seen that airfare thing they've released now, all those cheap airfares. Qantas says that hopefully it's getting international flights back by October, right? Once we can get that sort of happening, then we start getting more of the outside demand coming in. But we do have very strong demand coming into Sydney from expats at the moment, particularly Sydney, because Sydney's got such a great record from COVID, right? And it's becoming a destination for expats who may have originally come from other capital cities, because of Melbourne has the lockdown culture, right, and so does Brisbane. Whereas Sydney has the more open society and you know, perhaps a better control of the environment. But look, regardless of COVID, the vaccine rollout will hopefully be the end to this sort of outcome anyway, and we can get back to normal. But I do think this is just an interruption to what is an undersupply, and that data, it's 90% fall, more than a 90% fall in new dwelling approvals in the last 4 years. I mean, or since 2016. I mean, you just can't have that, you know, decline with a strong capital city such as this and not end up having an undersupply of property. And this will continue because there are still significant roadblocks to developers and to investors who are wanting to bring to develop product in Sydney, right? Which will only be, they'll have more enthusiasm to do that now because of the higher prices. You know, they're wanting to be, but it's still difficult to get finance. You have to have 100% pre-sales, those sort of scenarios, and even, you know, individual investors are still having trouble getting loans to purchase that product. Now that'll shift over time, hopefully, but all it means is that we're going to have sooner rather than later, once we're back to normal, a shortage of property in Sydney, particularly middle ring inner suburban property, which are the target of empty nesters and downsizers, and also the target for expats, particularly coming in. And of course, you know, with more variety, we'll also see first home buyers looking at these markets as well. You know,
interesting, but that you mentioned that this is the first time that there's more first home buyers in the market than investors.
Yeah, crazy.
But looking at that trend, it looks like we're starting to see the pickup of an investor market.
Yeah.
For what we've been noticing with Q4 Google sales is that throughout Australia, throughout Sydney, that first home buyer market is sort of dying out.
Well, it has to. See, the worst possible news for first home buyers is higher prices, because they're the first that are hit by affordability, because typically they're on a lower sort of the scale in terms of their income because they're on an earlier career path, right? And they don't have obviously a home to bring as a trading. So if you're an owner occupier, you've got trading, right? So you're keeping up with the market. If you're first home buyer, you've got no trading. And if house prices are rising, you've got to hope your incomes are rising to keep up with it. And of course they're not. So they're the ones that are going to run out of steam, first home buyers, earlier than the rest. And all the subsidies are finishing as well. They've got to wait for their next lot of subsidies at the beginning of July, which is the first home buyer deposit scheme. And there's not a lot, there's 10,000 nationally. But, so they're the ones that we will see falling away. But in terms of investors, well, you'd be a mug to be an investor in a sense, not seeing this prices growth and wanting to take advantage of it. Now you can almost bank another, 5% growth in houses and maybe another 5% growth in units this year in Sydney, and that's quite a rational expectation. And investors, see, this is the point. It's usually investors that drive the market when prices are growing this strongly in Sydney. It's typically investors come in, they want to take advantage of rising prices, then they create more demand, which pushes up prices even more, and then more investors come in. It's not happening. It's starting to happen now because higher prices are attracting investors, but they're still at a record low market share, which is good in a way because it's telling us that the regulators, the Reserve Bank, will be quite relaxed about having to interfere, which that would be, I think, another issue of creating a longer term problem if they did. But they don't have the rationale to do it this time because investors are so low. So these are good opportunities going forward because this price growth, there'll be less competition for first home buyers because they will start to feel the pinch with higher prices. And the economy's recovering and we've got some better outlook in terms of increased migration.
Okay. Very good. That actually leads to, before I ask for some questions to everyone, it does lead to something. Someone did ask, well, you smashed my question about, undersupply, and everyone's always talking about oversupply. And
yes.
But in saying that, and a few people have asked,
yes,
there's some investors watching, some investors here today, an unbiased approach to this next question.
Me?
Yes. Where would you see to find it's two parts. I want to hear what your comment is on the rental market at the moment,
yes.
And how that would be in the next 2 to 3 years,
yes,
with what's been going with the COVID situation,
yes,
and migration, and in taking that into account,
yep,
what sort of areas do we see as the most attractive for those types of investors to occupy?
Well, time constraints meant that I didn't speak about the rental market, but the rental market is interesting because it's a two-paced rental market at the moment. There's no doubt that we have low vacancy rates and higher rents in houses, and there could be a few things driving that. People are looking for a larger property because of work from home. They're less inclined to have tenancies. Now, there are areas of the market which are the reverse of that, and there's no doubt that parts of inner Sydney, particularly the inner west and the inner eastern suburbs, that is very close to the CBD, have record levels of vacancy rates, falling rents, and are finding it hard to secure a tenant. Now, most of these areas are fertilised or affected by Airbnb clientele. So what's happened is, because of the border shutdowns, the Airbnb market has collapsed, obviously. So a lot of the Airbnb stock has converted into permanents. Right? At the moment you can actually get a fully furnished unit in inner Sydney, inner east or inner west, cheaper than you can an unfurnished one, right? Fully furnished, beautiful, or the same price. Now, that's the problem in that market. And they're the markets that are close to CBD, and they're attracted to tourists, business travellers, and students, of course, as well, right? But the further out you go, when you get into more of a metropolitan environment, you still have quite reasonable vacancy rates and rents are quite stable. But it is that inner suburban Airbnb focused market that has created higher vacancy rates and lower rents. And that will only be absorbed when we get open borders again. All right? Yeah.
Okay. Any questions from the guys here today?
I think we had like 5,000 Airbnbs came into the permanent market. 5,000.
I found a lot actually in the Sydney CBD.
Yeah.
Either converted themselves to residential, permanent residential, or
we're actually renting them out to office spaces.
Yeah, well, look, you adapt these things. I think the other point is that these are actually good opportunities, as we mentioned, when we're going to get more downsizers and empty nesters who will be interested in, if stock comes into the market, in securing them as owner-occupiers, right? So it'll convert some of that holiday investment stock into actual owner-occupier stock from those that are looking to get into the inner city, right, as a downsizer or an empty nester, and having a reasonable amount of choice to do that and a market. But that's really only in those sort of CBD, inner west, inner eastern suburbs markets. You know, so, and that's a part of the process of absorption in those markets that may be converted from investor propositions into actual owner-occupier things. Because you can understand first-home buyers who were priced out of a lot of those markets would now be thinking, well, there's an opportunity for me because it's getting too difficult to buy, you know, in the middle market, to buy something in the inner west, or that, even though prices are still quite high from a first-home buyer's perspective. But it's all about swings and roundabouts, and that's why Sydney's a premium market. Right? It's not just because it's got the higher prices. It's the highest prices, their units and houses, because all the absorption comes into it. So where there's a vacuum in one area of demand, it's there, or supply, or an oversupply, it's quickly absorbed by always those levels of demand that are rising. And Sydney's, you know, a premier international housing market, and we've seen, you know, the prestige market as an example going through the roof recently as well. But a lot of the offsets, which has been interesting in lower migration, international migration, and we shouldn't get overly worried about migration anyway. It tends to be a longer term driver, international migration, but we're seeing the offsets from expats. A lot of expats coming back in, and there's a big queue still waiting, and they want to stay here and buy here, you know, as you could understand. Yes? Okay. Any questions? Yes?
Dr. Andrew, because of COVID and worldwide, Australia is a lucky country because there are less number of cases.
Yes.
As you said, I think mentioned before, that there is attention coming to the Australia.
Yeah.
And so maybe investors will invest.
Yes.
And so there will be more, you know, investors coming, and so boom, as you already said, there's 10% we can expect.
Yeah.
And so what do you say about that?
Well, there's no doubt that part of, I guess, once we do get international borders open, there'll be even more demand for settlers in this country, because Australia is regarded, rightly so, as a safe haven, a health safe haven.
Yes.
And we're seeing perceptions of that in Australia, that we've seen a big migration out of Melbourne into southeast Queensland for those similar reasons. You know, there's a lot of anecdotal evidence that people have sort of got fed up with what was happening in Melbourne and have decided to move to southeast Queensland, and that's driving that housing market at the moment. So COVID has a definite impact on population shifts.
Yeah.
I'm not sure we're going to see, there's been a lot of talk about moves into regional centres.
Yeah.
I think that's a little overstated. I think at the margin there'll be an increase, but the problem with regional centres is that they don't offer the high level of infrastructure that the cities offer, and that's going to be a roadblock, even if you can work remotely, to a lot of people. You know, health, recreation, you know, all those sort of infrastructures that have to be physically there. So even though I don't think we're going to see the shift away from Sydney into regional centres, I think the shift will come within Sydney, and I think that's still happening. And the whole point is that higher prices motivate people, and that because they're reflecting demand, and demand is everywhere at the moment, everywhere. And even in markets which have had higher levels of supply, such as apartment markets, they're now absorbing that. And that's why Sydney's a premier market, why its prices are so much higher than everywhere else. It's not just something that's happened, you know, as I guess a fluke of nature. It's something that reflects the nature of the market, its economy, its, you know, its urban profile, its infrastructure, its climate. You know, all those things drive demand into the Sydney market. And over time, and oversupply and supply is always a position in time, we are going to be seriously undersupplied in this country. You can't drop half of all your supply in 4 years and not expect to have a consequence. even if we started building today, it would take 4 years to catch up to where we should be, right? Even if we started building today, which isn't going to happen, it's still tough to get finance out there. We would still take us 4 years to get back to where we should be, right? And once the COVID thing, fingers crossed, works itself out and migration's back to what it was, it'll be overnight and we'll be paying even higher prices. It'll be like, Hong Kong, New York.
Absolutely.
Yeah.
I think investors from the area where they want to immigrate to Australia, like Hong Kong,
Yeah.
Taiwan,
Yes.
and maybe other countries like Europe as well,
Yes.
because they have seen the worst time of the COVID, and they want safe haven because when
Yes,
there is a life, people have to follow.
That's right, and it's been such a frightening
Yes.
experience.
Panic.
We've been very lucky now. We haven't had what's happened in Europe or US, which has been terrible. right?
Absolutely.
And that's because, as I said, I firmly believe it's because we've done the right thing here.
Yep.
Australians have said, okay, well, we'll do all this. We trust the government,
Yep.
maybe in the short term or medium term, but we'll give them a chance, and we did, and it's worked. Whereas I think other countries didn't have that same connection to doing the right thing in a lot of ways. But of course, that attracts us to people wanting to come in. The question is how we can get them in here once we open borders up. And there's obviously challenges to open the borders. But the government's working in a very positive way to do that. But we are more or less a miracle, this country, in terms of when we compare it to everywhere else. Economy, housing market, and our
Thank you so
response
much.
to COVID. Yeah.
And we've got Dr. Andrew Wilson with us.
Thank you so much, Dr. Andrew.
Guide our property decisions. So again, Dr. Wilson, thank you.
Thank you very much. Yes.
Yes. Feel free to subscribe to check out the Facebook page for both Q Corp and My Housing Market,
Yeah.
where you can also check in on LinkedIn. Dr. Wilson's every
Yeah.
week he's got these option reports. Thank you for coming today, and thank you guys for tuning in.